The fiat system globally is a Ponzi scheme. It is based on rolling debt and expanding monetary units. If you don't expand the monetary units, what happens to the price of everything? It collapses, it's deflationary, it goes down. They can't have that. That can't happen in this system the way it's constructed and designed. Don't get me wrong, I'm all about making the government more efficient in the way that they operate. Are they spending with fraud, waste, and abuse? You bet they are. Can we implement austerity measures and start playing by the rules in a global game that everybody's incentivized to cheat as best they can? No.
Do you think we should start on why why cricket is better than baseball? You should have seen him in Australia, Nico. Preston was like top off sweating. I think I was the only person in Australia paler than Preston.
Playing cricket? He's an athlete too.
Oh, he's competitive. He was good. Like for someone that's never played cricket before, Preston's good.
I'll tell you who was good was Peter. Yeah, he was a great hitter. He was cranking it.
Random Preston facts, right? Like Preston's like a scratch golfer when he's like actually playing.
Not anymore.
And Preston was the top of his class boxing at West Point.
Really?
Or the weight class.
Well, this is why we nearly got in a fight at Sailors. I'm leaving this in, by the way. So, Nico, we were at Sailors and like just stood on the dance floor, and Preston was like, "I could beat you in a fight." I was like, "Let's have it then. Come on, Preston."
No, the boxing thing's a joke because I only had three bouts, and it was super lightweight back then, or I was lightweight back then, so there's nothing impressive about it. But I didn't.
No. He's very modest.
Don't sell yourself short.
Yeah.
And you're a scratch golfer, but you don't even like golf.
No, I'm not. I was like 2.5 decades ago, 3 decades ago, but not anymore.
Why don't you like golf?
Because of total self-responsibility. There's nobody to blame.
It's not just because you'll spend all your time on the golf course.
That's why I really don't like the game anymore. It's an absolute time suck. It is such a time suck.
You know how I figured this out? Preston tweeted a picture of a Kirkland golf set, basically being like, you want to be a badass, grab this golf set and go out there and just smoke people. And then I'm like, hold on, wait. And I'm reading in the comments and somebody makes an asinine comment and Preston, of course, responds back of like how he could golf. And I was like, this is random Preston facts. It's amazing.
There you go. The secret is those Kirkland golf clubs are actually really good.
Well, it's the same, from what I understand, it's the same factory, I think, making Titleist, right?
Yeah.
So, it's not like it's...
I thought it was TaylorMade, but maybe it is Titleist. We're going way off the deep end here. But so, let's just get started. So, one of the things that I wanted to start with, Preston, is kind of a follow-on from the last conversation we had on what Bitcoin did with Luke Groman on these Bitcoin-backed bonds. You kind of that was the first time I'd really heard that. And then since then, Brian, is it Estes? How do you say his surname?
Brian Estes.
Yeah, he's come out with a 2-page white paper on these Bitcoin-backed bonds. So do you want to give us the rundown of what they are and how they're going to fit into potentially the kind of treasury market?
Yeah, so Brian Estes, Perry-Ann Boring, and I think David Bailey, and there might be maybe a couple more that were the ones that really kind of drafted this. I'm pretty sure they've gotten it in front of quite a few people within government to take a look at it. So let's start by just doing a real basic education on like what is a bond, because I think this is really important for people to even like broach this subject. So when you issue a bond, let's say I wanted to issue Danny a bond, I'm trying to raise money, right? Let's say I issue a bond for $100. I need $100. So I sell Danny a bond and I say there's a 5% coupon on the bond and it's 10 years. So what I do is I take this slip of paper, I sell it to Danny. He gives me $100 of cash right now. And it's important to highlight the fact that the terms of this deal is all in fiat, okay? He's going to get dollar fiat back throughout the life of this bond, and he's not getting anything other than fiat cash. And I just raised $100 worth of fiat cash in the initiation of this bond, okay? So if the coupon's 5% and the face value is 100, these are some of the terms, or these are some of the terminology that's associated with this. So I pay him $5 every year in addition to the 100 that I've got to pay him back at the end of the 10 years. So if we're talking about inflation, a bond, because it's denominated in fiat and nothing else, is completely impacted by any type of inflationary impacts, right? So let's say that inflation was 5%. Okay. That 5% that he's getting every year in coupon payments from me is just completely eroded away because of the devaluation of the fiat that all this is denominated in. And then at the end, I give him the $100 back. Just a little like side note. The reason these are called coupons is because when you would buy a bond back in the day, there was these little coupons that you would literally rip off of the bond book. Okay. And you would mail it, like Danny would mail me this coupon. And then I would say, oh, okay, I owe Danny this 5%. And I would write, him the $5 and send it to him for that coupon that he mailed to me. And then at the end, it's the face value of the entire bond book. So he mails me that and it's $100. And then I pay that $100 back. It's super simple. Okay. So this idea of a Bitcoin backed bond is very simple, just like this. Okay. So let's walk through it with a 1% backing of Bitcoin. So I raise $100 and Danny knows that not only is he going to get the fiat back at the face value of 100, but he's also going to get 1% of that face value back in Bitcoin at the time that we initiate it. So I want to raise $100 with this Bitcoin backed bond that's 1% backed. Danny gives me his $100. I immediately go and I buy $1 worth of Bitcoin with the 100 that I just raised. I continue to squat on that Bitcoin for 10 years. I keep paying him 5% in cash, fiat cash every year. And then at the end of the 10 years, I have to come up with the $99 from somewhere. Okay. And I have to pay him that back. And I also give him the $1 of Bitcoin that I bought 10 years prior that's been sitting in Bitcoin that whole time. And I deliver him that Bitcoin. Okay. That's what a Bitcoin backed bond is. So now let's think about it. If Bitcoin, which is priced today at $100,000, let's say over that 10-year period goes to $1 million, now you really have, in fiat terms, $10 worth of Bitcoin that has protected a lot of that debasement that I would fully expect happened over that 10-year period of time in fiat terms. And so for him, this becomes a protection measure against inflationary impacts. And, if there's one thing that I think the world, and you can see since COVID, the bond market has just been devastated, absolutely wrecked in the valuation of what these bonds are worth, because everybody's starting to price in the inflation and they're looking at the fiscal deficit, not only in the US, but every other country around the world. And they're saying all this fixed income bonds are denominated in dollars, and I'm going to be crammed down my throat the face value of these bonds whenever they mature. And so for the last year, when you look at Janet Yellen and the Biden administration, you know what they did for the $7 trillion that they issued over the past year? It was all short duration issuance. They couldn't put 20, 30, 10 years on the bond. They had to put 1 year on the bond, because if
Why
they
is that?
Well, nobody would buy it. There would be no buyer, or better yet. So going back to our example, if I went to you and I said, "Hey, Danny, I'm raising $100 with this bond issuance. Give me the $100." What happens is, as soon as I put that on the market to sell it, because it's got so much duration on it, it's got 10, 20, 30 years of duration on it, there's no buyers. And so what do you have to do when there's no buyers? You have to drop the price. So what does that look like? I say, all right, Danny, I don't need the full 100. You'll get 100 on the face value in 10 years from now, but I'll sell it to you for $70 right now. And I only raised $70 as opposed to the 100 that I was trying to raise, and the 100 that I got to pay back after 10 years. Right. So they knew if they took it to auction, the auction was just going to be disastrous, because they have to put so much inventory on the market. So what do? They just drop the duration and be like, well, you're not going to be impacted by inflation because it's only 1 year, duration. And so they were able to raise the amount. And I think, honestly, I think they were scared to put anything with long duration on the market because they knew the auction was going to be a total train wreck, right? So this is the challenge. So if you put it on the market for that, and I'll think through the yield. So people see the yields going higher and higher. So how are the yields going higher and higher? Because if you buy the bond for $70 and the face value on it is 100 after 10 years, the coupon gets reassessed. It's still a 5% coupon, but when you account for the 30 extra dollars you get at the end of the 10 years, and you combine that with the yield that's coming out of a 5% coupon, the real coupon that you're getting, and I could pull up a calculator and do the math, but let's just use generic numbers here. It would be like you got a 9% yield. Okay, you as the buyer. But me as the issuer, it's like I'm paying this super high interest rate because nobody's willing to buy the face value on it. And so this is really basic bond math, but to understand why a Bitcoin-backed bond is so important, you have to understand these basics because look at MicroStrategy, okay, with their convertible debt deals. Why were these the best performing bonds on the planet since all of them that he's been issuing? They're like the best performing fixed income bonds on the market. Now, these are convertible, which gets a little bit more complicated, but for simplicity purposes for the listener, this is what they have to understand, is because there's a relationship to Bitcoin, the underpinning of Bitcoin to it, there's this enormous amount of demand because people are looking at Bitcoin's performance over the last decade and they're saying, if there's even a small piece of that associated with a fixed income bond that's accustomed to being completely denominated in fiat, I want whatever that is because it's going to probably protect me from the inflationary effects that impact all fixed income instruments that are denominated in fiat, right? This is a really big idea. This is a really big deal. So when we're looking at the fiscal deficit of the United States, and we already know the deficit's around $2 trillion, which means they are going in debt by $2 trillion more next year than what they already are, which is $36 trillion. That's the growth rate of this debt. So Elon's coming in and he's trying to reduce that by $1 trillion. Okay. But where is the largest growth rate in this deficit? Where's it coming from? It's coming from interest payments on the issuance of new debt because these yields are blowing up because you can't issue anything with duration. Okay, so how do you get that under control?
What Bitcoin did is brought to you by our lead sponsor and massive legends, Iron, the largest Nasdaq-listed Bitcoin miner using 100% renewable energy. Iron are not just powering the Bitcoin network, they're also providing cutting-edge computing resources for AI, all backed by renewable energy. We've been working with their founders, Dan and Will, for quite some time now and have been really impressed with their values, especially their commitment to local communities and sustainable computing power. So whether you're interested in mining Bitcoin or harnessing AI compute power, Iron is setting the standard. Visit iron.com to learn more, which is IREN.com. This episode is brought to you by River, the best place for Bitcoiners and businesses to buy Bitcoin. With River, you can set up zero-fee recurring buys, making stacking sats effortless. And while you're waiting for the perfect buying opportunity, River lets you earn daily interest on your cash balance paid in Bitcoin, which outperforms most high-yield savings accounts. What really sets River apart is their unmatched dedication to security. You have peace of mind knowing that River has monthly proof of reserves and holds all Bitcoin in multi-sig cold storage. And with US-based phone support, you'll always have someone ready to help. To open an account, go to river.com/WBD and earn up to $100 in Bitcoin when you buy. That's river.com/WBD. Can we just take a step back quickly first? Because there's something that I think I'm missing here. Obviously, all the Treasury issuance has been on the short end recently. Why is that a problem? And why are short duration treasuries more money-like and inflationary than long duration?
Well, because you're just straight up monetizing the debt, right? It's the same as cash. Whereas if you can issue something with duration for 30 years, you're first of all pushing that risk to somebody else that you don't have to pay that right now, especially if you can do it at like nothing % interest rates, which is what this whole world was accustomed to going into COVID. But the price that's often paid when you roll debt is what you're really doing is you're shortening the duration until you get to a point where it's like you're just all you can issue it is overnight money and you're just straight up monetizing the debt at that point. You're just realizing it all into more fiat units into the system, as opposed to masking it as like this asset and it getting bid like it did for 30 years. No, 40 years, sorry. That's why it got bid for 40 years is because as they were rolling it, it was masking the printing by stripping away the duration and the appetite for anything with duration.
So in these Bitcoin-backed bonds, one thing that I'm unclear on is like, where does the Bitcoin go for the 10 or 30 years duration?
Well, so like in the example that I provided, it was, I have to buy that, like that would be part of the contract to make these desirable.
So it goes into like an escrow.
Yeah, it goes into an escrow. This is why I think Bitcoin is way better than gold, is because you could time lock multi-sig the custody. So think about this. If part of the terms and conditions are that I'll take 1% of what's raised in the bond and I immediately buy Bitcoin within 30 days or whatever the terms stipulate, right? And I lock that into a multi-sig time-locked account that the time, like it would require 2 of 2 signatures to move it before the 10 years, meaning you and I both have to agree that we've got to move the Bitcoin to you, okay, which isn't going to happen, right? But you want that in there in case the two of us come together and we want to renegotiate terms and we come to an agreement. So that's why you'd have 2 of 2. Earlier than 10 years. Then after 10 years, by a time lock, because you can do this with Bitcoin, you can't do this with a gold vault, okay? After 10 years, it becomes 1 of 2 signatures to move the Bitcoin, okay? And that 1 of 2 could be designated to just your key and not mine, right? I could actually lock myself out of the vault after 10 years. To guarantee that I can't steal the funds or retain the funds. Good luck doing that with a gold vault where I'm custodying it the whole time.
And if you wanted to sell the bond before the duration is up, I assume you then just have to swap a key out.
Then it would be a 2 of 2 signature, I guess. Yeah, which is another example of like why you would need 2 of 2 key signature prior to that. Because if you wanted to sell the bond to somebody else, then there you go.
Do you think there's any chance that this actually gets implemented in any meaningful way?
Well, I think at the U.S. federal level, I think that is like such a moonshot idea, first of all. But this idea could be implemented at a local level, like anywhere in the world, right? Like you got small governments and you got big governments and you got people that are out there that can hear this idea and say, well, geez, I sell munis, right? I sell municipal bonds in whatever jurisdiction I'm at. I could do something like this. And I'm telling you, whoever does this at a government level, like it's going to be mind blowing to watch the results. Cause I think the auction is going to be not only insane, but here's the advantage for the people doing this. They're lowering their interest rate. Because it's going to be so oversubscribed, just like MicroStrategy. MicroStrategy is issuing convertible debt deals. Guess what their interest rate is? It's 0%. It's 0%, right? So they just have to pay the face value back. And for their convertibility, they can just transmute it into common stock, which the price there is paid through the debasement of the common shareholders, which is fine. So I think any municipality that's looking at this, I think that they're going to find, especially ones that have a large debt burden or interest rate burden to fund themselves. Like, hey, here's a great idea that just you need somebody to execute it. And I think that the results would be astounding. I think the appetite for this is through the roof. Because here's the thing a lot of people miss as well. there's so many trillions of dollars in the world from money managers, fixed income money managers that have a mandate to own fixed income.
Yeah.
Okay. So this is a product that they can buy that like meets their prospectus of having to buy fixed income. And if you don't think they want to put even a small portion of this in their portfolio, I think you're out of your mind. I think they'd be tripping over themselves to put this in their portfolio.
And what kind of Bitcoin kicker do you think they'd need to put on these long duration bonds?
Like hardly anything. I mean, you could argue that you're de-risking it by putting a smaller percent in there for them to buy it, right? But I think what the issuers might find is if I issued something at 10% backed by Bitcoin, that the interest rate that they're going to pay and the oversubscription and the interest on it, the interest from like the buyer side, like people interested in buying it, is just going to be freaking gangbusters. So like if you're a comptroller somewhere or whatever, and you're like sitting in one of these seats to like exercise something like this, like, God, that'd be fun. It'd be really fun.
It's really interesting, this point that you're making on like at a state level. I think we're seeing this with the strategic reserve of like the strategic reserves at a state level. And I think your point of like figuring it out is kind of fun to watch. You would only need a few of these issuances before you could really create almost a sensitivity analysis of like, where does this bond, the initial interest rate, have to be in order to versus like how much Bitcoin is backing this. And it would be pretty fascinating and how quickly like the market would demand that and figure it out.
The thing, if Luke Roman was here, he would tell you the shot heard around the world was when the U.S. took back the $1 trillion of buying power from Russia, from the Treasury market. Right? They exercised the Excalibur of the U.S., which is its Treasury market and its SWIFT payment system and all that, and they basically just said, that's not yours anymore. Even though you made all that money, it's not yours anymore. He would tell you that's like the shot heard around the world. And something like this that takes the control out of the issuer and is actually just a fair terms and conditions for both parties is a total game changer. Anybody who's an honest broker is going to look at them and be like, that's exactly what I want.
The funny thing with that is, and it's a little bit like the strategic reserve, in that the countries that I think would probably stand to benefit from this the most are the people like Russia, China, even like North Korea. It's the sort of pariah states. And it seems, to me at least, that the US has almost the most to lose because of the US dollar. Do you think they're thinking like that?
So there's a really famous book called Only the Paranoid Survive. This was one of Steve Jobs' favorite books. And I mean, the premise of the book is either you can cannibalize yourself or you can have somebody else come in and do it for you. And right now, what I would tell anybody from anywhere in the world that's listening to this is, yeah, the U.S. has benefited from dollar dominance, period. But the technology inserts itself and dematerializes competitive advantages. Typically, we're used to seeing this just like at a company-to-company level. But what you're seeing playing out right now is a decentralized technology that is dematerializing the state's advantage to exercise the printing press. And if you're a country that just wants to lean into the old way of doing something and not recognize this decentralized technology and move towards that and cannibalize yourself, because when we're looking at the game theory on this, the worst outcome is to fight it as opposed to embrace it. And like that would be my message especially to U.S. policymakers is you can fight this as much as you want. But in my humble opinion, like all you're doing is shooting yourself in the foot even worse by fighting it as opposed to embracing it as early as possible. So, but you have to understand what's playing out. You have to understand the game theory. You have to understand that you are being dematerialized by this decentralized protocol. And if you don't understand that, your gut reaction to fight it is going to lead you down the wrong path.
Yeah, so that is the really interesting thing on the strategic reserve idea to me is that like And I kind of want both your takes on this. Let's start with you, Nico. Do you think that the strategic reserve is a threat to the US dollar?
I think not having the strategic reserve is like the biggest threat to the US dollar. I think that Preston's point of like the incorporation in some way, shape, or form to Bitcoin, whether it's bond issuances or like a company that is starting to aggregate Bitcoin in the way of like we have strategic reserves of rare earth metals or certain elements that we see as crucial to national security, and we've had that for all of time. I think like what we're realizing is this thing can solve a lot of problems that the U.S. currently has. And if the U.S. wants to continue to be dominant on the world stage and not have a slow and then rapid kind of destruction, you have to embrace change. And part of this change is Bitcoin. I think what we're seeing, Denny, and this was your point on like Russia, North Korea, some of these other pariah states, Iran, is those, and this is my kind of like thing with some of the companies in the space too, is those people that feel pain the most are generally the ones to recognize like a solution to mitigate or that pain. And historically, like the U.S. financial system has worked really, really well for people in the United States and companies and at a state level. But I think what we're finding right now with the current economic position is there has to be something that changes. I think that we're all pretty excited about a strategic reserve. I think Preston's point earlier on the bond issuance is pretty key here. Of to do it at a federal level is going to require congressional approval. To do it at a state level, there's less barriers. And so I'd almost look to see certain states that start to do that earlier on.
Yeah, that's interesting because the Bitcoin-backed bonds, again, to me as a layman, signify even more dollar weakness than the strategic reserve.
Well, I think that this is the big concern with it. Is if the U.S. comes out, especially at the federal level, and says, we're backing, they could do it as a test. They could do, 5 different issuance, all within like a short time frame. And one of them is backed by Bitcoin and the other ones aren't. But my concern is the demand for the one that has the Bitcoin backing is going to clearly make a demonstration on it's producing a lower interest rate, based off of what it's purchased at and how it's reducing the amount that's having to be paid back. And that is going to be like a shot heard around the world, especially if the U.S. is the one first to do it. And what does that do from a global game theory on Bitcoin? I think it accelerates it in a massive way. And so then at what pace? I don't know. I have no idea. To the strategic reserve thing, if they come out and say, "Oh yeah, we got a strategic reserve, we want to acquire a million Bitcoin over whatever time frame," I think that's a shot heard around the world. And what does that do to fiat currencies? I think I think it starts to get pretty crazy really fast. And I think that if there would be a counterpoint to doing this, it would probably be something like that. And, so then let's talk about what does that mean from a game theory standpoint? Well, if you're in charge, you want to start acquiring this stuff as much as you possibly can, but you want to do it in a discreet way that nobody realizes that you're acquiring as much of it as you possibly can. So, that might be what we see come first. And then it just all flips to this idea of a Bitcoin backed bond. But I think I really do think where you're going to see this play out first is at a local level or a really small government level. They're going to start doing stuff like this. And even that's going to be hard to keep the lid on it, because I think the performance is going to speak for itself really quickly.
Does it kind of come down to the question of what's more important for the US to try and sort of strategically save, whether it's the dollar or the treasury market?
Yeah, I think so.
And you think the answer to that is the treasury market?
Well, you're saying which of those two options would make it more discreet by issuing a Bitcoin bond or doing the sovereign wealth fund thing's also at play here, which we hadn't even discussed, which, you got.
Yeah, give us the lowdown on that as well.
Lutnick's he seems like he's going to light this thing up.
I think the part with the strategic reserve that if I think about it from the game theory that you guys are talking about and the signaling of dollar weakness, I think that the way that you would try and message it, and it's really interesting, like how most of our like brains work. Like you hear what you want to hear. So I think that if you were to message to those outside of Bitcoin that you're aggregating Bitcoin or you're creating a strategic reserve of Bitcoin in the same way you have a strategic reserve of oil or tantalum or plutonium or uranium, and these are all things in the best interest of the U.S.'s like world dominance of things that we need to have. Then maybe that gets by, or ammo. But I think that the if we just step back and you're looking at the forest from the top, you're going to really quickly see that this shifts the conversation on dollar dominance.
This episode is brought to you by Casa, the leading Bitcoin self-custody solution. I've been using Casa for a few years at this point, and I can't recommend them enough. Casa have options for all Bitcoiners, from a 2 of 3 multi-sig to a 3 of 5, and a private client option for absolute best-in-class security. Casa also have an inheritance product, which I've recently set up, and it couldn't be easier. My inheritance plan has gone from a vague treasure map for my wife to a rock-solid plan that I have total confidence in. To find out more about Casa, go to casa.io, which is CASA.io. This episode is also brought to you by Ledger. If you're serious about protecting your Bitcoin, Ledger has the solution you need. Their hardware wallets give you complete control over your private keys, ensuring that your Bitcoin stays safe from hacks, phishing, and malware. With Ledger's easy-to-use devices and the Ledger Live app, managing your Bitcoin has never been more convenient. Whether you're a long-time holder or new to the world of Bitcoin, Ledger makes it simple to keep your assets protected. If you want to find out more, visit ledger.com and secure your Bitcoin today. That's ledger.com. So on the sovereign wealth side of things, that's always been like, obviously Norway have a huge sovereign wealth fund. The Gulf states, which are all like kingdoms, have a sovereign wealth fund. Do you think if the US do implement one, first of all, where will the money come from? And secondly, do you think that's a positive?
Yeah, I mean, first of all, when you look at a sovereign wealth fund, it should be for excess, not for countries that run $2 trillion deficits every year. But going back to another point that Luke likes to make, which is the greatest export the U.S. has ever had is its U.S. Treasury market. So, we can print and we can offset whatever we want by expanding the sheer number of fiat units in the system and then just continuing to expand them to offset, it pains me to say that, because as a person who just likes to play by the rules and do the right thing, that's not something that is really kind of quote unquote fair from a global standpoint to the other countries that maybe aren't operating off of a currency that is the world reserve currency. But I think that that's probably, from a game theory standpoint, the smartest thing to do for the U.S. If they're just looking at their own personal interests as a country. Help me out with the question again, Danny. I got a little sidetracked.
I guess the big part of the question is where the money comes from for the sovereign wealth fund.
Yeah. I think it comes from that. Another would just be if we look at the TikTok thing. So Trump, TikTok was banned, and then he comes in and says, no, it's not going to be banned, but I want half of the ownership of it. Right. Which this gets into a whole nother, governance standpoint. Should the government have control of half of a company? You could debate this for eons, but in that scenario, that might be like the perfect, if you were going to push all the governance stuff aside and say that, okay, well, then that might be the best way to hold on to it. Now, you open a whole can of worms with respect to conflicts of interest and things like that when you're holding private or publicly traded equity in a sovereign wealth fund, especially when you start getting into the pharmaceutical stuff. Good Lord, I could only imagine the breakdown in incentives there. Like, look at this COVID shot. And I mean, you even heard Lutnick kind of mutter that when they were starting the sovereign wealth fund. And I was kind of like, oh, dear God. Like,
I didn't even hear that. What did he say?
Oh, my God. As Trump was there signing the executive order for this thing, he said something to the effect, and I'm going to get this way wrong, but it was kind of like, yeah, wouldn't it be nice to kind of have the ability to own something before the government goes in and buys like all these shots to basically own the equity of the companies that are going to get approved for this kind of thing in advance in a sovereign wealth fund. And I'm just like, dear God, that's really scary from an incentive standpoint. So, yeah, there's a lot in there that I think you could argue a whole bunch of different directions.
Do you think we could see a weird thing where we get both a Bitcoin strategic reserve and we have Bitcoin in a sovereign wealth fund?
Yeah, why not? Yeah, I think so. Like, I think to Nico's point that he was talking about a little bit earlier with like, what is a strategic reserve typically for? It's more for like commodities and trying to be able to offset and balance supply and demand issues so that there's not these massive price, like this is the intention. I'm not saying that this is how it works in execution. The intention of like why you have one of these things is to basically act as a dampener to supply and demand in strategic and important commodities. That's typically why they're used. So, why would the US, and that gets a little scary, right? Because like, let's say the price of Bitcoin's ripping and the intention is to dampen whatever those effects are by either buying or selling. And it might not be used in that manner. It might be more used just to acquire as much of it as they can for a strategic, purpose. But yeah, I think when you look at like the naming convention of these quote unquote tools, that's, the intentions.
I think one of the other points on this that's like really interesting that we're seeing like play out right now is like Bitcoin on companies' balance sheets that have nothing to do with Bitcoin. And you're starting to see this permeate. We're seeing certain deals right now that are within the market that companies looking to be acquired that are public companies by private companies with the intention of making those basically Bitcoin accumulation vehicles. Or aggregating a bunch of money, SPACing into another company and simply running the same playbook. I think depending on how that continues to play out with the mix of like private and then going public, marketplace will start to serve as almost a testing ground for some of these other things. Because what's happening is like, if you're in a state position right now, you're watching that play out and you're looking at how the market is behaving towards that thing that is Bitcoin. I think that type of proof over and over again, and I'm not saying that's good or bad or otherwise, but we can look at like the macro situation and it's pretty fascinating to see. I think that's where it comes into, let's test some of these other things. And when you see this white paper come out on like Bitcoin-backed bonds or strategic reserve and the game theory behind that, until we actually run the playbook on it, we don't really know what that looks like. But we do have the beginning of the examples of what does that look like in a public space when a company acquires Bitcoin and how the market treats that company. It's pretty fascinating.
It is. That's one of the things that I've said this before, but I'm both short-term bullish and more medium-term bearish on, is the idea of like lots of companies basically copying the MicroStrategy playbook. Because what I can imagine happening is we see a lot of companies come in, try and be Sailor, and they're just not Sailor. And they'll probably get unfavorable terms on their debt. And then what happens next bear market? Is that something you're watching closely, Nico?
So one of the things that we're looking at, I think that this is fascinating. And I think that we have to be very careful of Michael Saylor's like 1 in 8 billion. Do we have 8 billion people in the world? And he's been able to execute this strategy flawlessly. And he has an actual company today that makes profits, and he's able to transmute those profits into Bitcoin. I think we have to be really, really careful of the incentive structure with some of these companies that otherwise, and MicroStrategy should be a public company. There's no way around this. Like, it should exist as a public company. I think one of the things that we have to look at is how does the market behave and how does the market view companies that probably don't have either as strong of financials as previous public companies that would be issued in the past would have, or the other part of it, how does the market behave like when you have a business that's been floundering and flat and that business starts to acquire Bitcoin, like longer term? I would be really, really curious on that. That's what I think I'm personally really excited about. And I think you're going to start to see in the next IPO cycle in the back half of this year, next 2026, is companies in Bitcoin that are Bitcoin companies that make profits, and those profits are in Bitcoin. So you kind of have this high growth tech company that is also cash flowing Bitcoin. I think that type of company has very little risk of failing. And I think that the market sentiment towards that type of company would be really, really favorable. Now, again, this is all just theoretical at this point, but you're starting to see the buds of those type of companies in private markets. And I'm really excited to see one of those go public. And what does that look like?
Yeah, the intent of your question, I think, is wrapped around if we get too many quote unquote Michael Saylor type companies in the future moving forward, that's going to create a bunch of sell pressure if they can't basically retain their profitability or manage their position size appropriately when they fall on hard times, and that's going to have an influx of coins that are sold into the market. Is that kind of like where you're going with the question? Yeah. So one of the things that I think is unique about the way MicroStrategy has done it is anytime that they need to make some type of coupon payment or par value payment in the future, or they're just raising cash and buying it into Bitcoin, they've done it by expanding the number of equity tokens, their stock, onto the market.
Mm-hmm.
And so it's not that they have to come up with cash or that their profits have to be generating cash in order to provide this back into the market, or that they have to sell Bitcoin in order to come up with the cash to pay it back to the market. And so when you look at the structure of how they've done it, it's very intelligent. It's very smart because they can just continue to expand. Now, the overall value of the stock might go down, and that might be painful for people holding the company because they just keep issuing more shares to offset some of these decisions. But I think that they're able to retain a lot of the Bitcoin without having to cough them up and sell them to make good on a lot of the structure of all these things that they're issuing. So as long as companies are coming in and they're strong from an operations standpoint, and they're structuring these products in a similar way, it might not actually turn into a bunch of sell pressure. But again, it comes down to the intelligence of the people running these the companies and how overzealous some of them are going to get over their ability to retain, competitive moat and free cash flows in the business.
Yeah, because the thing with don't get me wrong, I don't think MicroStrategy are going to struggle here, but is there going to be enough appetite in the market for other companies to come out and issue 0%?
Compared to today, I think the appetite hasn't even been remotely addressed with what's been issued. But will that become an issue down the road, 5, 10, 15 years? Absolutely. Will it reduce their ability to make yield against the NAV? Like, this is the metric that I'm running around saying the new earnings per share. This is like Michael, this is how he reports his results, which is I added another 10,000 Bitcoin to my balance sheet, and before I had 400,000, therefore that is this yield. Like, that's the new earnings per share. Is he going to be able to stack that high of a yield in those terms that I just described if everybody else is out there doing this? No.
I also think the environment's going to get much competitive. So like, Preston, you had this point of the operators of the company. Like, this is one of the things that I think is going to play out in the years to come of. I think the environment right now is like, there's so few companies that are actually doing this, that this comes into the amount of appetite that there is versus the amount of interest. I think that what becomes really interesting is like, well, now let's say we have 100 companies that are doing this, and you're looking at the financial health of each one of those companies, the executive teams at each one of those companies. And now you're getting to weigh that with the amount of Bitcoin that they have and the business cycle. I think like that's going to be interesting from like my standpoint. And then the other part of it is like, well, what do the businesses do? So I think that as we see businesses in Bitcoin that start to get the financial metrics to actually go public, those are going to be really intriguing because they're the few businesses that people are actually like either giving them Bitcoin, and that becomes part of like what they're cash flowing, or part of the operation, they're splitting the Bitcoin that the user is getting. And they don't then have to go into a brokerage and buy it. I don't know how any of that's going to play out, but it's pretty fascinating to watch.
Back to your question, Nico, from a little earlier, actually, I'm kind of jumping around a bit here, but what do you think the makeup of the companies trying to copy the MicroStrategy's playbook will be? Do you think it will be smaller companies, or do you think we will see people like Apple and Meta actually make a real play in this in the kind of next 5 years?
This is a really interesting question. So like Preston and I and everybody else at the fund see this a lot, and it comes into just investing in Bitcoin. The problem that you see, and you saw this with MicroStrategy, or not MicroStrategy, with Microsoft when it was brought to a shareholder vote.
Yeah.
And that's a different scenario. But let's take a company that's smaller than that, but still more sizable than what we're seeing play out right now. The people that have to buy in at a board level are generally, they're highly paid, and there's only a few hundred of them in the world that do those jobs. And if that means that with something like this, there's not much upside for them. They're not going to get the yield of like what is being generated, and they're because of that more risk prone or risk averse. What you see on the other side is with the companies that are much smaller, the companies that we're seeing to date that are SPACing into the space, or private buying a public company. Those companies generally have a few operators that are bought into this strategy, and they're more risk prone. And I think that because of until that changes, where the conversation becomes a threat of, well, you're not doing this thing, you're not engaging with Bitcoin, so your shares are not being bought by the market, or in the debt issuance, no one is buying your debt. Until that conversation changes, the larger companies that operate, in my opinion, in a more risk-averse environment for their own jobs preservation will be the last adopters.
But why is the incentive not there? Like, if they're sat on tons of cash and they're either doing like buybacks or dividends or whatever they're doing, why not, instead of doing that, buy some Bitcoin, even if it's a tiny percent?
I would just say their mindset on these boards, because these positions are great, right? Like they get the prestige of sitting on the board. They don't have to really kind of deeply understand something to hit a grand slam. Putting Bitcoin on the balance sheet is kind of a grand slam idea. Because they haven't done their 100 hours of homework on it, right? So they're looking at this thing and like, yeah, the performance has been crazy, but what if it gets hacked? What if it, like, all the really amateur hour, like I've spent 15 minutes looking at this type arguments is what they're armed with. And so they don't need to hit a grand slam at the risk of striking out. All they need to do at the worst is just get hit by the pitch. Like, as long as they can get the first base or get walked or whatever, they're going to continue to sit in that seat. And that's, like a very low risk with for them, high upside, which is I retain my board seat. It's just the mindset. And then you got to think of it too, is it's not just one that you got to convince. You got to convince like a majority of the board in a lot of these decisions. And so for these big companies, they're just like, well, we don't have to do that. We're Apple. We're sitting on hundreds of billions of dollars in cash equivalents that are giving us, pretty high return yield with 5% by having, 1 month money on the books, which is giving us a higher yield than long duration stuff. And they're just like, we don't really need to do much here with this treasury. Like, what can we do operationally? Oh, the self-driving car. Oh yeah, it sucked. Okay, what can we do? Can we fix Siri? Well, clearly they're not doing that because that thing seems to get worse. I don't know, but they're very risk adverse, like Nico's saying. So it's a function of just how weak and how much they just don't have to hit a home run.
I think this point is great, right? Like, it is based on at-bats. And if we use this analogy, like, it is not
we
even
need to get
based
some cricket
on
analogies going here.
Yeah, I would love to get some cricket analogies. Like, if you think about the board members, right? You guys hit this all the time of the cycles of Bitcoin, the compounded annual growth rate of Bitcoin. These guys think in like quarterly, like their mindset is in a quarterly basis. What's going to happen in the next 3 months? What can I do over the next 3 months to like not rock the boat too much? How can I maintain for a board seat, like $500,000 to a few $1 million position to show up 4 times a year? And so it's just the incentive structure is off. I mean, we see this in a private space with companies that are not even public about investing in this space. Like, we could get buy-in from a company that's mature from a private standpoint. So you're talking about a multi-billion-dollar, tens of billions of dollars operation we might get 3 of their 7 board members to buy in.
Here's something else, and it's definitely not for the money. Like if they get paid $1 million to sit on this board, they could care less about that because they're already over the top wealthy. These people that sit in these large companies, it's the prestige of sitting on the board. So now think if that's the real incentive for them to sit on this board is the prestige of sitting on the board. And there's other factors. I'm just kind of using this as one like kind of way to look at it. There'd be nothing more embarrassing than to be the person that brings this to the board as an idea and it goes south on them and they kind of go down in the books as the one who was relieved from the board because they were the crazy person with the Bitcoin idea. That's just risk to their ego. It's risk to like they just don't think like this.
But at some point, that's going to be someone, and they won't go down as like the idiot that brought a Bitcoin. They'll be the genius that brought a Bitcoin. This
is why the whole MicroStrategy thing is really getting interesting, right? Because as we go through the next 4 years, I think it's just going to get so demonstrative, so insanely demonstrative that this company that is outperforming NVIDIA, that only makes, call it $100 million a year, and just so people know, that's like chump change compared to some of these other companies and what they make. But yet this company continues to outperform them year over year. You're going to get to a breaking point where people are like, okay, clearly I'm missing something.
I'm surprised we've not actually got there sooner. Were you disappointed with the MicroStrategy board meeting? The Microsoft board meeting, the fact that they gave Saylor 3 minutes to absolutely speed run a presentation?
I didn't know what to expect, but yeah, giving him 3 minutes was almost like a slap in the face. But he got it. And, I actually loved the presentation that he gave. It was like, I equated to like AI. The amount of compression that happened in that presentation was astronomical. And like whether you've invested the energy and time to decompress the file that he put out there is kind of the part that really makes me smirk. Because, you got to put a lot of energy and a lot of time into being able to even understand what he was saying. But let me tell you, there was a lot there. Yeah. So he put it there.
We did an event right afterwards. And what Press is talking about, he decompressed that 3 minutes. It took 30 minutes. So at 10x compression down, it took 30 minutes to get through those 3 minutes.
And I wasn't even close.
It was amazing. Yeah, it was amazing. But I think the other part of this, Danny, is like, we're here. I think we're here. And like, to me, that's so exciting. Like you're in the room, you're getting to have the conversation. You might already be set up to fail, but like someone is giving you a little bit of airspace to listen. And that's so different from even just a couple years ago. And that to me is very exciting. And I think that there are different people at a government level, at a company level, that are looking for ways to distinguish themselves. And because of that, we're going to still get a little bit of this conversation and slowly like the dam breaks.
Yeah, totally. It's a massive sea change in the last few years. I want to change gears a little bit and talk about DOGE, because I know Preston's been on a rant about this. But let's start with you, Nico. What's your just like overarching view on the whole DOGE thing right now?
I think there's a lot of like government inefficiency. I haven't spent any degree of time in government, and definitely not even close to what Preston's done like with the federal government. So I think there's a lot of government efficiency. I think like someone actually like being able to look at this is interesting from my standpoint. It is interesting to me that someone that's not a U.S. citizen is getting access to a lot of things that are probably pretty sensitive from like that standpoint. I don't really have like a super educated opinion on it, so I'll kind of like yield from there and let you guys talk it through and can jump in.
We can defer to Preston here then. So what do you think the chances of them actually taking $2 trillion off the budget are?
Oh, I think $2 trillion's a lot. I think that's a lot. Could he get to maybe $1 trillion? I think he might be able to get to $1 trillion. But the thing that I think is even maybe more missed on all of this is this idea that they have to keep expanding the fiat units in the system, right? Like if they do these cuts and they're pulling it back, like as far as the monetary units in the system, which are deflationary, who's going to add them? Because you can't have the prices of all this property go down, right? Mm-hmm. Because what does that mean for your top line on your on your revenue for taxes. Because when you look at the correlation of that, let me tell you, it's very profound. If you had a down market in this S&P 500, the tax receipts in that following year are way off and way down, and that deficit's going to continue to blow out. And so I would first of all frame this, because I think this is the more important talking point, and then we'll talk to the DOGE piece, which is the fiat system globally is a Ponzi scheme. It is based on rolling debt and expanding monetary units. If you don't expand the monetary units, what happens to the price of everything? It collapses, it's deflationary, it goes down. Okay. And that's the one thing they can't have is the value of a person's house. Let's say it's $500,000. They can't have that person's house go down to $300,000 next year, and then they're forced to move for a job or whatever, and they realize a $200,000 loss. They can't have that. That can't happen in this system the way it's constructed and designed. So if you have to keep expanding the monetary units, and you go in here and you're saying, well, I did a show with you and Peter where we used this monopoly board example, and this is a perfect way to frame this. Okay, so let's say we have multiple monopoly tables. And if you remember the rules is, let's say there's 4 different tables. There's 4 people at each of these 4 tables for 16 people playing the game. If you are able to buy the property and the scarce desirable equity on the board of another table, you can take your currency on table 1 and go over to table 2 and buy the equity off of table 2's board. What you find is in this scheme of this collective global game is that there's an intense incentive to print as much money as possible faster than the other boards, because then those players can go to the other boards and buy the equity. And so what you're suggesting through austerity, which is what DOGE is attempting to do, which is austerity measures and become more, and don't get me wrong, I'm all about making the government more efficient in the way that they operate. Are they spending with fraud, waste, and abuse? You bet they are, right? And that needs to be fixed, okay? So that's important for me to state. But going back to this scheme, this global scheme, fiat scheme, the incentive is to print to that local board and then allow those players to go to the other board to scoop up the scarce desirable equity that's producing free cash flows as fast as they can, faster than everybody else. So when we look at this, can we implement austerity measures and start playing by the rules in a global game that everybody's incentivized to cheat as best they can? No. Because if you're the only, now, if every player, let's say there was a collective agreement that all 4 players on all 4 boards, so 16 players come together and they say, from here on out, there's no more expanding the fiat units. And there was some way through mathematics to enforce that they can't expand the monetary units. What happens to the incentive of the players? All of a sudden, they want to start reducing the local government. They want them to be more efficient. They don't want to pay higher taxes. They want to start solving deficits, local deficits on the boards. Okay, but you have to be dealing with a sound money that is now the network effect and is more dominant than the fiat, system.
So you're saying until we have a Bitcoin standard, we can't do this?
Yes, that's exactly what I'm saying. And so what I'm saying is when you look at the size of the fiat market relative to Bitcoin, Bitcoin's a pittance in buying power term. Okay. So you got to play the corrupt game better than everybody else is playing the corrupt game until you're at parity or Bitcoin is bigger than the buying power of the other game. And it's important to say buying power because if you look at the number of units, it's always going to confuse people. But if you look at the buying power of the 2 different systems, when the fair system has as much buying power as the corrupted system is when you're going to really see incentives for austerity start to work. But until then, it's so I'm looking at, so now to answer your DOGE question, because I think that's really, really important for people to understand the game, right? You have to understand the game. You might not like the game, but that's the game. So now let's talk about DOGE and its ability to reduce the deficit. So they've got, call it 7 trillion of spending, and they've got like 5 trillion of money coming in the door for, call it a $2 trillion deficit. And Elon's saying, I'm going to take $1 trillion out of that 2 trillion, which means you're still growing the debt by $1 trillion, even if Musk is successful in what he's saying he could probably do at his best. You're still expanding the debt by $1 trillion. And what I'm saying is the world's already accustomed, especially U.S. citizens are accustomed to that trillion entering the system somehow, some way, that he's going to remove out of the game here. And so what are they going to do? Isn't it ironic? I find this hilarious. Musk today, I just read this on X, wants to send a $5,000 check to everybody.
I saw this.
Offset so this goes to the point I made when I made the DOGE video, and what I said right from the beginning is, you might save all this money, but if you're going to play this game, you're going to have to still print it somewhere. It's a matter of where are you going to send it after you print it. That's really kind of the question. Well, it seems he's going to mail out the checks, and it's going to be very much like the COVID stimulus. And what happened during COVID stimulus? You saw the price of everyday items, call it a steak, call it, the stuff that everybody, when you have a $1,200 stimulus check in your pocket that you never had, you're just going in more debt every month. So to have this quote unquote windfall of $1,200 hit your bank account, what do people do? They go out and they for once they get some relief to go get the one thing that they've wanted. And so what does that do? Well, it impacts supply chains. It impacts the prices of everyday items. Now, all this printing that they were doing from like 2008 up until COVID, how were they inserting all this printing? They were doing it through QE. They were doing it through bidding bonds, which were then having an impact on equity. So basically, it was making the properties on the monopoly board go up in value, and people weren't collecting more when they went around go. But now what Musk is saying is, well, now we're going to give a little bit more money when you go around go, but we're probably still going to do QE type things. You all right there, Danny? I just kept talking.
Oh my God, I swallowed some water badly. But so is it not better though that money, instead of goes to like the corrupt government, goes to the people?
I think so, but yes. So the answer is yes. If you're gonna print a bunch of money collectively, like what's best? Well, what's best is that everybody gets a cut of that printing. If you print $1 trillion and you have 1 billion people, like write the check to all those people, right? Yeah. Equally. That's a fairer system. But what's the impact is because of how everything's been constructed, you're just going to watch prices rip on everyday items, your CPI bucket, and then they're just going to change the weights of the CPI bucket and make it seem like it's not a lot of inflation, right? That's what the government's going to do in response. But is it better for everyday citizens if you're going to debase, is that a fairer system than pumping it into QE and the people who already hold the assets basically get richer and everybody else pays for it? Yes. But that's what's funny. What I found online is when I say this, people are like, Preston's for UBI. No, I'm just for, like, if you're going to cheat at the game, which we have to cheat, like everybody's got to play this game. The whole game is rigged to cheat. It's a Ponzi scheme. Okay. How do you play that Ponzi scheme the fairest way? I guess it's UBI. I don't know. Right.
Yeah.
I guess it is.
If they're printing $1 trillion either way, why is $1 trillion to the people more inflationary than it is however it's being spent right now?
Because when you're printing and doing QE, all they're doing is they're printing a bunch of money and they're buying fixed income bonds off the market, and they're saying it'll be trickle down effects. Like that money will fall from the heavens down to every last person at the bottom of the pyramid. But what really happens is the people at the top who own those assets, they get this cash infusion and they're like, all right, well, there's less fixed income. Let me go look at the equity market. Okay, well, it's priced here. I'm just going to buy this stock with this cash that I got from this fixed income that I had, right? And so then the equity markets get bid and it gets more valuable. And that's why you're seeing PEs at, 30 plus on publicly traded markets. And that's where it went. It went into asset, going to the monopoly board, right? If we're going to do QE as an example, what QE is the banker saying, all right, well, I got to get some more cash in the game here. So, Nico, you're basically squatting on all the properties. I'm going to buy those properties off of you. I'm going to give you all this cash. And now we got some more cash in the game. What's Nico going to do? He's going to go to the remaining little bit of equity that the other three players have. And he's going to say, I'll buy that. I'll buy this. And I don't care what price I pay. You can make the prices super high. I'll pay that price. And he just scoops up any asset that's generating free cash flows, because as he goes around the board, he just makes more and more money. You, on the other hand, had to give up the one thing that you had that was like somewhat protecting you from, going insolvent, and you had to sell it. He was giving you a sweetheart deal in the moment. You had to take it. That's QE. Whereas UBI is everybody goes around and we're going to insert it as you go around the board every time. And we're not going to play this QE game. But that was the weapon of choice for government after 2008 for a decade straight. And they're going to probably have to do some form of this now too. Like these $5,000 checks are a pittance compared to like how much they're going to print and do this way I just described via QE.
Danny, you had the question though of like, why do the $5,000 checks cause more of the CPI inflation than the typical way of this? I think what we've seen is that when this does happen during the stimulus checks, like people don't save that. They end up buying the thing that they've been waiting to buy. I have a friend, really good friend. He has a high-end knife company, and his knives start at $350 and go up to $15,000. During the period of those stimulus checks, he did more business than he's ever done in his life.
They've been conditioned to spend, right? Because whether they know why or not, we don't even need to address that. They just know that $1 today is 99 cents tomorrow. They understand that deeply in their core. Now, whether they would admit it or not, who knows? But they've been conditioned that that's reality. And so when you get a hot dollar in your pocket and you're normally losing more money next month, like you are conditioned to spend and consume as fast as you can.
I'm just conscious of time because I've got a hard stop in like 20 minutes, Preston. But you have some charts that you want to run through with us. Should I pull them up?
You know what? The only one to really bring up is the first one that I sent you, because it kind of just is a graphic of this deficit DOGE conversation that we were having. And it just does a really great job kind of laying out like what it looks like as far as the expenses versus what's coming in the door and what the deficit is. And then what DOGE is trying to tackle, which is about half of the deficit. Yeah, there you go. So you can see this on, anybody watching the YouTube version, you can see all the expenses over there on the right-hand side. Just call it 7 trillion. And then what they're bringing in is the 5. Literally right before we started this call, I saw some article on Zero Hedge saying that Trump is looking at reducing taxes by $4.5 trillion to like incentivize corporations. And like, you just look at this, then you look at the left side there, which is, 5 trillion in receipts. And you're saying, well, how in the world does that work? Like, how in the world how does that work? And again, this article literally came out 5 minutes before we dialed in. So who knows how like authentic any of that is, but it's interesting because everybody's talking about how they're going to be more efficient, they're going to save money, and I'm sure that they're catching I honestly believe they're catching a lot of fraud, especially when it comes to like free speech stuff, which is interesting because Elon owns X, and so he's like going after that hardcore. So there's that whole piece, but I don't know. I'm just kind of looking at all of this and kind of smirking and saying they got to still play this Ponzi scheme. They still got to play this game, whether you like the game or not. They're going to play it, and if they don't, it's going to be devastating for financial markets. And if there's one thing that I think Trump takes a lot of pride in, it's that he can make the stock market bid according to like his first administration. So the only way you can do that is by expanding the monetary units, and you can do that through tax cuts. You can do that through all sorts of ways. But I suspect he's going to do it, and he's going to do it pretty aggressively. So we'll sit here. We're not even on the 30th day of this administration.
It's crazy, isn't it?
Recording this, but it feels like it's been 6 months. And so like, hang on. I think it's only going to get more turbulent and wild. And like, I just think you can't even imagine what we're going to hear within the next 6 months.
So despite all of the DOGE initiatives, you think we're going to get a big print again?
Yeah, they got to put the units into the system somehow. They have to have the liquidity in the system. Well, here, okay, go to the third slide there, which speaks to the global M2. And so, yep, right there. Just click that. And so when you look at this trough, this is global M2. So it's not just the US, it's all the M2s from all the major countries, and then it's all put into dollar terms. And you can see this is the growing supply of fiat units around the globe. And what I find fascinating is that big run up that you see there from 2020 to like 2022. That was the COVID stimulus pump that happened. And you can see it's been really quite flat since 2022. You got a little bit of a run up going to September of 2024. You can see that little bit of run up there at the end. And if you go to the last slide, I think I zoomed in on that particular part of the last like year. Yeah, here you go. Or the last 4 years. You can see the big run up in COVID. And then you can see it was pretty flat. You can see here from basically June of 2024 till September, you had globally a lot of liquidity that was added into the system. Wonder what was happening then. Maybe there was an election happening then, right? And then all of a sudden, after the election happened, you see a lot of the liquidity come out of the system. And if you think about the Bitcoin price action, you saw a lot of price action leading up to the election, slightly after the election, and then it's been pretty flat since. So these are important things to look at. These are important things to think about. And at the end of the day, they're either putting liquidity into the system or out of the system, and markets will react accordingly. So that's what I'd leave you.
I was speaking to Jeff Ross a few weeks ago, and he was talking about like the liquidity cycles, and he thinks they're far more important in terms of Bitcoin price than the halving or anything like that. Where are we in the sort of liquidity cycle right now?
Well, I mean, I think you're seeing it right there. I think that based on like the lines that are drawn there, I think that they're going to have to add a bunch of liquidity here in the coming year at some point. I don't know how much further they can breach that lower line. It doesn't seem like that the markets like to breach it very often, looking at the last decade, right? So I don't know how much that can persist before things get really painful. Well, heck, go to slide 2. These slides ended up being perfect, Danny. Okay.
I knew they would.
Slide 2, like what does this tell you, right? Look at the credit card hits a record 1.2 trillion. This was a CNBC chart that I just saw posted today on X. So
that's a depressing chart.
How much more can your everyday person handle before it gets a little too much for them to kind of handle from a liquidity standpoint and solvency standpoint? So I don't have a good answer for you, but I suspect that something's going to have to be done this year where they're going to have to add a bunch of liquidity. If I had a DXY, the dollar looks like it's, from a technical standpoint, I'm not a big technical analysis person. From a technical standpoint, looks like it's about to rip, and like that would be devastating from a global liquidity standpoint. That has to be offset. Has to be offset by the U.S. expanding monetary units with swap lines or something. I don't know. So
it's funny that, like, amongst all this, I don't know if you saw Elon Musk talking relatively recently, saying we're going to get to a point where you can walk down the supermarket aisles and prices aren't going up. He thinks he's going to beat inflation. Do you think he really thinks that, or do you think he's just pandering?
I don't know. Is he going to mail the $5,000 check to everybody? Because if he does, I don't think he's going to beat inflation.
I can't see it, to be honest. But this has been great. Thank you very much, both of you. Anything you want to close out on, Nico, before we go?
I think it's an incredible time to be in the space. We're having a lot of fun. Thank you so much for having us on. In order to reach Preston and I, if you guys have any type of interest in anything that we do, you can reach us at Ego Death Capital on the website. Thanks, Danny, so much for doing this. It's an absolute pleasure speaking to you.
No, this has been great. I really appreciate you both. Preston, anywhere you want to send anyone?
Yeah, I've got a podcast. It's in the We Study Billionaires feed.
Just a little
Ego
podcast.
Ego Death Capital on Twitter or X or whatever we want to call it. But love having these conversations with you, Danny, and hopefully we can do it again.
No, this was great. Well, we'll see you in Bedford. Are you going to come to Bedford, Nico?
I should come to Bedford. Preston,
You've got to
great time.
come. We can line up some more cricket. It's honestly, you should try and come. It's a lot of fun.
Yo, we do need to have some cricket there. That would be
could definitely
fun.
do that on the football day. I'm sure we could before the football starts.
Oh, that's fun. I'm in.